Today I'm going to start on SLV. I did day trade SLV, and I'm not really going to go over the analysis here much. If you want me to break down this chart a little bit, watch yesterday's video. Today I just want to kind of record, I guess, a journal that I did day trade a call, February 3rd, $22 call. I made about 25% on that, bought it in around 30, sold around 40. And I currently am holding a couple of what I call lottos, options that expire at the end of the week, and they are currently out of the money, which is to say that the price is on the worthless side of the strike of the contract, i.e. the 22.50 strike call will be worthless on Friday if the price is below that level. And it currently is by about 46 cents. This would represent a $5 loss between these two contracts if the price fails to rise to those strike prices. Not a big deal. That would be an acceptable loss to me because I have some profits. See, I like to wager. This is gambling. They're single-sided options contracts. I'm not hedging or anything. I'm just doing some analysis and kind of going for it. It's just the way I like to roll. I'm not a very good investor. I'm not really investing. I am doing what the market wants, which is assuming a lot of risk. Apparently, that is all I'm good for as a day trader. Going into GLD, still setting new highs. I don't know what to say about it. It won't stop to retrace. It just won't. It just keeps rising. And this, of course, is correlating nicely with a drop in the dollar, which continues to push down to lows, new local lows. Breaking through an uptrend. I mean, I thought we'd see a bounce there. We haven't. I don't know why I still have these lines. At this point, what I should be really waiting for is a pull back up to the trend line and then a test of whatever low this was that we set before that test. It may never happen. It could just keep dropping. There's a lot going on in terms of monetary policy. I'm sure you've read the news. I don't cover the news. I think it's kind of just noise. I stick to the analysis. The price is the ultimate indicator, and it will always include all of the factors, it being the master indicator, the price. Here we are at SPY. I've been showing a symmetrical triangle here, and it looks like we're at point E overthrowing that. We're not really breaking out to the upside yet. I don't think anyone really knows what SPY is up to. It looks like we could be coming up for a bullish reversal, but we're going to need a solid high above 402 and really get above 408. I'm not even going to think about saying anything bullish about SPY until we get up to 408, maybe even 410 looking at this peak back here. I do have after hours turned on at the moment. I'm going to go ahead and turn those off before I hop into the meme stocks, AMC, GME. Let's just go take a peek once I close those dialog boxes. AMC coming into contact with that critical level of support and resistance at 536. I said if we get a close below here, we really could see a move down to like $2 or something like that. Down. 293. Up. Now, whether or not we get that depends if we can really confirm a price movement below this dip at 531. That would be confirming not really a double top. A double top, you wouldn't want to see this much of a price difference between the peaks, but I believe that we will see a much more pronounced dive after a bounce. I think we got a little bounce coming and then a big plunge. I don't know what the time frame for that is going to look like, but I suspect that we've probably started the construction of a new motive wave heading lower, which would just look something like this. And I'll just leave that there. We'll come back to it later. That's a wild guess, but that's what I got. GME, my analysis has been really spot on for quite a while. I've been talking about the way the price has consolidated around that $26 level and then formed a channel heading lower. We're now in a corrective broadening pattern, and failing to close above 21.89 would be bearish. It suggests that this push higher was corrective in nature, which I did call. We were back here. I said, hey, we're going up. We went up. Now it's coming back down. We bounced back up. And failing to rise and close above that level is indeed bearish. Now, what I do want to point out is it looks like we could be in some sort of triangle up here. That might be technically a pennant per Bulkowski chart pattern analysis. Keep an eye on that. This would be point A, B, C, D, and E would be here, and then we'd see the price spill downward. Still looking at implied volatility dropping, and the RSI is not showing any real clues as to what's going on. I do think we're going to see the RSI drop into oversold strongly if we are going to see a big dump. So that might be like a morning move, a gap down. So maybe a gap down GameStop. That's what I have for today. Just really quickly, a lot of energy. I know, a lot of energy. I traded SLV and I made some money, so I'm feeling good. Discord is going great. I love the conversation, you guys. Excellent stuff. We should have like